All right, everybody, welcome back to the channel. Welcome back to a new video, and today is going to be a special one because today we have a guest. We have a Wavecipher hanging on the other side, and who's going to walk us today through the charts, because it's nice maybe to see my way of thinking, my charts, but it's also great to see someone else's perspective, someone else, his indicators, and if you have two different traders, you have two different charts, two different outcomes. And the purpose, of course, is to give you the knowledge and the tools what you need to make the best decisions out there. Now, before I am introducing him to the channel, I want to make one remark, and that is that he is using an indicator called Market-Cipher. This is a paid indicator. I am using this indicator as well, but in all the previous videos I have never shown you that because, like I said, it's paid. So if you start Googling for it or try searching it on a TradingView, you will most likely not find it. And therefore I always try to make it as easy as possible with the RSI and the MACD. But in the future I will most likely also show a few videos where we are using the Market-Cipher indicator. So with that being said, and before I'm really bringing it in, I want to ask you to smash up that like button, click on the bell, click on all so you don't miss anything, leave me a comment, share this video with your friends if you think that's useful. And now without further ado, let's bring him in on the channel. Alright, Wavecipher, welcome to the channel. We can see you live and clear, including your chart. Before we go into dive in, how are you doing today, my man?
I'm doing fantastic. So happy to be here. This is my first collab on YouTube ever. And of course, it's with one of the OGs of my channel. Anybody who's here because of my name, please subscribe to Trader Ray. This man's fantastic. He does great content. So happy to be here, man. How are you doing?
I'm doing great. Absolutely great. BTC and ETH are pumping again. And that is the day after I said yesterday, we might be topping out. I see some overbought signals. I see us overheating here and there, people getting very bullish. But so that's why it's also good for our viewers to get a second view, to get a second trader on the channel. Maybe that person sees something else. So the floor is yours. We are looking right now at your screen, the BTC USD pair. Yeah, show me what you're seeing in the charts and what should people be looking out for BTC USD.
Yeah, that's a great question. So it's actually a very exciting time to be in crypto. If you are in crypto right now, pat yourself on the back. This is one of the best times to be in crypto. This is an impulse wave reversal out of a bear pennant that broke to the upside, which, as Ray has told you, generally speaking, should not happen. Ray is totally right. That bear pennant should have taken us down to 20K. We should be counting our blessings that it has not. What I do see for the near short term, so let's start on the 4 hour. So on the 4 hour, we can see that we did get this huge momentum wave push up. This was a squeeze of shorts out of the previous range. These pictures are actually covering. Let's get rid of that. All right. Yeah. So out of the previous range at 45K, where everyone thought the top was, bang, we broke that huge impulse wave up, huge momentum wave. We got to cool off from that. So we got to zoom in a little bit to see how that cool off is going. Let's look at the 1 hour. If we do look at the 1 hour, so whenever we did pump up, we did have this weekly level sitting here at 47,386. We did find resistance at that level, came back close below it, came up to test that same level again a second time. We got rejected third time, broke through rule of threes, Bitcoin, came back down to retest the level, bang, came back up, rode the level a little bit, came back up again, retest again, bang, back up. What I see that's significant at this level is that we are seeing a rising bottom. So as we do retest this support, we did come down to 46.8 last time we tested it. This time we retested it, we only came down to 47.1, and again, closed candles back above that key level. It looks like we are making sure the ground is firm. Usually when you do that, you will see that set up for a push up. Would be a third test of this level as well. If we do break that, we'd be looking, we have a spider line here at 48.8. In the near short term, I do see that. Now, if we do zoom out, if we look at our larger timeframes on the daily, we are very overextended in terms of if you had gotten in at like 39.5 or somewhere down there. We are very overextended. Cool off is coming. 12-hour, we are getting a 12-hour red dot. However, the average price is higher than it was before. We are getting a slight MACD converge bearish, but that may change as we move into the close. So yeah, man, I think you're right. I think that on a macro time frame, we do need to cool off a little bit from here. If we did make that push up to 48.8 and then came back to cool off, the golden pocket would actually be really close to the spider line at 41.1. I think we could come there. I think more likely is that we come back to this weekly level right here. That's also the 382 sitting at 44K. We got a weekly level there at 43.9 as well. That would make a lot of sense if this is the wave one of an impulse wave reversal. We would see that pull back to the 382 and then maybe push higher. That's what I see at the immediate short term. In the really short.
If I may interrupt you, so most people saying, cool down is most likely due. I explicitly never mention an exact price level or exact day, because the price can always surprise you up and down, right? We always go a little bit higher than we think. We always go a little bit lower than expected. That 45K was seen as a critical barrier to break through because it was resistance 3 times. How likely do you think, if we are going to break down, that will not be the new support? Because I thought you just mentioned something in the 44K that will be then underneath that support level that we hope that now had that support level that used to be resistance. How likely do you think that chance is, or would actually also be a great location to trap maybe even some shorts, thinking we broke the 45K, we're going lower, then suddenly boom, we're going higher. So yeah, what do you think is the likeliness of us reaching 45K or then breaking a little bit lower to that 44K?
Yeah, great question. So that's a perfect question. If we look to Richard Wyckoff, what he says, right, once we break a critical resistance, that resistance then becomes new support, right? So if we do have that in mind, if we were looking for a pullback to 45K, and I do believe this is probably more likely than that we pull back to 44K. If we were going to see a pullback to 45K, that would mean that our daily fib level, where we're drawing our retracements from, in order for us to get that 382, that sweet spot retracement at that 45K level, we would have to pump on this pump up to $50,400, which is also a spider line that we have. So I think it depends if this 200 MA that we're currently battling with right now, if this becomes clear resistance and we do reject off of this, I think it's more likely that we come down to that 44K area. I think if we do continue up to 50,000, get a little bit above that from the FOMO and then dump down, that would make sense. We would have a spider line there, come down, another spider line at 45K, probably come down, get a little bit of a fake out here, get the real bounce of 45K, and go back up to around 56. If we were going to do that, and then we draw our targets from, let's say we retrace from 50,500 down to 45K, that would put our macro target, our 2618 at 60K, which is where people think the FOMO rally might be going. So yeah, I could definitely see that playing out as well.
All right. So what I think a lot of people be caught by the pump a little bit by surprise. What would your advice be if people are not in a trade right now? Would you say we still have a lot of room to go to the upside? It's safe to get into long? Would you say wait until we cool off a little bit? What is your view right now for people standing on the sideline?
Yeah, that's a great question, because I actually believe that there is always opportunity in these markets. There is always opportunity. People will tell you all the time that this is a no trade zone. I don't believe in that. I think you find a trade anywhere. So what I would tell them is look at your 1 hour time frame. If you look at the 1 hour time frame, we are in a clear uptrend with very, very little retracements. It looks like a staircase that if you've been in Bitcoin long, you're very used to. So From that, we know that if we are in this 1 hour uptrend and we take it from swing high to swing low, this wave only retraced to the 236. That is a very, very strong wave. So we know from our 1 hour that we are in an uptrend as long as this 1 hour time frame does not come lower than 43.5. If it does come lower than 43.5, that would be a break of structure and we'd have to reevaluate our trading plan. So until then, we would be a little better off entering longs than entering shorts. So for example, earlier today was a perfect example of this. When we saw this massive sell-off, everybody's scared, a bunch of bearish volume. Everyone thinks we're going down. When we do come down here, if you are looking, I'm looking at the 3-minute time frame, for example, you would see that from back here, there's a clear direction that the momentum is trending. And if we compare that to the upside, there's a clear direction the momentum is trending. It is trending in this channel to the upside. So generally in a trending market, like if we look back here in a trending market, 90% of the waves and the oscillators are going to be to the upside. You're going to see everything trending in one direction. Most of your opportunities are going to be in the downside down here. Right. So if I was looking to scalp, I would see a very low green dot here and I would probably buy this with the intention of holding it to go up. And then if I do see a red dot above the 0 line, where was that? When we were here, I would probably take some profit out, move stop loss to entry and try to catch the wave. If you are, whatever time frame you're entering on, the 5-minute, for example, if you do enter on this green dot, when you see this red dot, you take some profit, you would enter it here, take some profit here, move stop loss to entry, keep writing it up. Probably get stopped out right here. But yeah, you'd want to analyze what trend you're in and then bias your trades towards that trend. That would be the way that I would approach it if I wasn't already in trades.
All right, cool. And for the macro trader, let's say someone puts in a trade once a day or once a week and doesn't want to be bothered with a 5-minute candle or 3-minute candle, and they're just looking at those big swings up. And since the last week or 2 weeks, we already had that big swing up, would you then still say, you know what, wait for a little bit of pullback and get in? Or would you say wait until we're really cooled off? Or would you then approach it in a different way? Really, like I said, if you are trading on the macro time frames, nothing on leverage, just maybe spot trading, so here and there, and you're really catching those moves of 10, 20, 30%.
Yeah, if you if I wasn't already in a swing position and I was looking to enter one, I've deleted all the spider lines off my chart except for this one at 56.6. I do believe that this is going to be the top of the dead cat bounce. So I am swing trading based with my stop loss at all-time high. So if I was looking at the market that way, and I am looking at an ultimate target down here around 20K, if I was trying to enter some swing trades, I would be totally fine with entering a 2x short here, a 2x short here, a 2x short here, a 2x short here, and maybe if I'm lucky, a 2x short here, stop loss at all-time high with the intention to ride that all the way down to 20K. If I was swing trading,
interesting
that's
that
what
you
I
had
would be
56K earlier, because in yesterday's video, that is also exactly our golden pocket for the move up as where we are in right now. So 56K was also exactly our golden pocket. Will be interesting to see. I actually personally am in the camp that we are going to 56K, retrace a little bit, and then break through. I really hope that this is not a dead cat bounce and that we are not going to dump down. But we'll see. But I think indeed, if you're really swing trading, then maybe for now, watch out a little bit. I thought that the 4-hourly was a little bit overbought, daily getting slowly overbought. Territorial sheet now in your chart, it's almost going parabolic. Then maybe wait a little bit for the retracement and then spot trade in all the way up to 56 or then 55K if you want to be sure. Then get out. All right, cool. Thank you so much. Do you have anything on ETH for us right now?
Okay, so Ethereum. So Ethereum is actually looking better than Bitcoin because if we do look at this green line here, this is the yearly average price for Ethereum. We did not retest that in the summer, whereas we did test Bitcoin's yearly average. Then we came down, we lost the yearly average. Anytime you see we're below the year average, that's garage sale prices for the crypto. We did come up. We've already broken the yearly average on ETH. I'm currently battling with that 200 MA. I see two cases for Ethereum. I see we reject off of this 200, come back down, find support on the yearly average. If we do that, the sky's the limit. I mean, I think new all-time highs, I think 4K easy for sure. If we lose that yearly average, that's not good, right? Because we saw that happen here, came up above, it was a fake out, came back down. If we do lose that, we're probably heading back to the spider line here at 2,500. I think it's really going to depend on this key level. Let's call it 31K. If we hold that, I see us going higher. If we lose that, Bitcoin probably went down and we might be in trouble. But I think that's going to be your make it or break it point right there.
Yeah, yeah. Could you explain maybe why this yearly average is so important when you're trading crypto or other asset classes?
Yeah, for sure. So let's switch over to Bitcoin to do that. Let me turn off everything here except for the yearly average. We get rid of my spider lines as well. So this is on the weekly. If we look at the yearly average on the weekly, that's this green line on the screen. Anytime that a cryptocurrency, so this is Bitcoin. Let's go to the BLX chart just so we can be a little bit more precise. So this is Bitcoin on the weekly, the BLX chart. If you are buying Bitcoin anytime that it is under this line,
yeah,
you are eventually going to be in massive profit in the history of Bitcoin. This is considered fair value for Bitcoin, and anything underneath that is considered garage sale prices, considered back up the truck, buy as much as you can because it's on sale basically. So the fact that Bitcoin on the daily is currently sitting right at this yearly average level shows how important it is that we either break up here, come back down and retest it and go higher, or if we reject off of this, it would look very similar to what we did during the bear markets right here in 2018. What we don't want to see is we lose the yearly average, accumulate, come back up and sell it all off and then come back down. If we see something like this at the yearly average, that would be bad. But I don't see that happening.
All right, thank you so much. I think that's absolutely clear. So we have some clear levels underneath us that we need to hold. I do share your opinion. I think there's a lot of caution underneath, so there are many levels underneath where we could bounce off from that used to be resistant before, and we have now clearly cleared it. I think we share the same that in the long run, for the next couple weeks, we might see much higher prices, but people should not be completely surprised if we suddenly see a little bit of a drop, a little bit of a down. And I think the diversity of how hard we're going down, how hard we are retracing, will set the pace for what's coming after, because the harder we go down, the weaker actually it is. And if we find a little bit of a base, somewhere between 5 or 10% underneath us where we're trading today, that will be perfect. Retracing all of this, what we just gained, that will be pretty bad. So I think that's kind of the conclusion that we have. Let's see who's going to be right. I do not think that 56K is going to be the dead cat bounce. I think retracement and higher. Let's follow up on that anytime soon. I'd like to thank you so much for joining on the channel. Let's do this soon again. Is there any place where people could follow you or join you on your journey or whatever?
Yeah, first of all, thank you so much for having me, and we can definitely follow up on this. I would love to be wrong. I hold a big bag of spot on pretty much everything. So I'm with you. If we can go higher, I'm totally with you. Bearish by nature. But yeah, I definitely see 56K. I think if you're trading low leverage, that's a very safe target. I mean, if you're trading 2x and you're going long, your entry probably does not matter that much if your take profit is at 56K. If you're trying to make more money, that's when it gets a little hard. But definitely a great time to be in Bitcoin. Definitely very happy to be here. You can follow me at youtube.com/wavecipher. Follow me on Twitter. Handle is @wave_cipher. And yeah, just so glad to be here, man. Thanks for having me.
All right, cool. I'll also drop his links in the description. So if you want to follow him, check out the links in the description. Follow him there. You'll also find 2 other links to my Twitter and my Instagram. Also feel free to check that out. I want to thank you guys so much for watching. Of course, don't forget to smash the like button, click on the bell, click on all so you don't miss anything. Leave me a comment, share this video with your friends if you think that's useful. Wavecipher, thank you so much again. See you in the next one, and thank you guys so much for watching. See ya.